Does looking at your restaurant financial statements give you a headache? Do you ever wonder why some of the terms your accountant throws at you, what they mean? If you feel like you should already know what these terms mean and you're just kind of afraid to ask your accountant for clarification, you're not alone. In just a moment, I'm going to share with you what I think are the top 10 restaurant accounting terms you need to know. I'm Dave Scott Peters, restaurant expert, coach, and creator of the Restaurant Prosperity Formula. I've been coaching restaurant owners since 2003, and I'm really glad you're here to learn. Today, I want to share with you the top 10 restaurant accounting terms you need to know. But before I do that, if you like tips and tricks like this, do me a favor, hit that like button, hit that subscribe button, and oh yeah, that bell so you're notified when my next video tip comes out. And for more tips and tricks for running a profitable restaurant or to hear restaurant owner success stories, make sure you tune into my podcast, Restaurant Prosperity Formula, found on all the popular podcasting services. Let's get right into it. Let's get into the top 10 restaurant accounting terms I think you need to know. Term number 1, accounts payable. These are basically expenses you owe that you haven't paid for. So in the restaurant world, we have accrual accounting, earn OUs. That means when a shipment comes from your broadline distributor and you sign for it but don't pay for it, that is an accounts payable. You brought in product and you owe them money. So we're going to keep track of that in our balance sheet called an accounts payable. Term number 2, accounts receivable. Well, this is the opposite. This is when you sell something, but you haven't collected money yet. So maybe you have a catering job that you put them on terms and you said, hey, you could pay me after, a week after the party. Well, that means we had a sale go up, but somebody owes us money. That's the offsetting entry, if you will. So an accounts receivable is money that we're owed based on a sale. Term number 3, cost of goods sold. This is one you should be very familiar with, but just in case you're not, it is the cost of the product that you're using to bring in the money that you brought in. So for instance, if I sell food, I used product. Now the key here is this is not what your purchases are. It is an adjustment based on beginning inventory plus purchases minus ending gives us use. What leaves the shelves is what cost of goods sold is for the money you brought in by that sales category. Term number 4, gross profit. Now this one throws people a curve when you hear gross profit. It is not what you made. Gross profit is your sales minus your cost of goods sold. That's it. It's what's left over that you can pay the rest of your expenses, including your labor cost. Term number 5, net income. Now this is the number you want to know, but it's still a little bit hairy, if you will. You're going to find this on your profit and loss statement, otherwise known as your income statement, otherwise known as an operating statement. They mean the same thing. At the very bottom, what did you earn? But be very, very clear. This is not your cash flow. It's earnings based on amortization, depreciation, interest expense, meaning the government regulations to show you what you owe taxes on. So it's your adjusted income, what you're going to report as profit or loss. Term number 6, GAAP, generally accepted accounting principles. When you hear somebody say, oh, well, I set this up according to GAAP, they're generally accepted accounting principles, but do know that you still need to know a little bit more about accounting. For instance, I can take all my use for food, and GAAP is to take that food use divided into total sales, including bottled beer, draft beer, wine, liquor, merchandise, and come up with this really tiny percentage of say 10% or 5% cost of goods sold for food cost. Well, it is right based on generally accepted accounting principles. What you've got to understand, restaurant accounting is use by category into category sales, that we will only take our use for food and we're going to divide it into our food sales. So while GAAP is generally accepted, it doesn't mean it's still right for you. Number 7, your balance sheet. For all intents and purposes, your balance sheet is stuff and who owns the stuff. Because we often go, what is this other thing? Well, everybody gets familiar with their profit and loss statement, but what is a balance sheet? It's stuff and who owns this stuff. So you may have food on the shelf, but you owe your broadline distributor. They own it. Does that make sense? I hope so. Term number 8, journal entry. Well, I'm going to make a journal entry. What does that mean? It's basically a record of any credits and debits in one or more accounts. So if I have my journal entry for my daily sales, it's going to show the sales by category. I'm going to enter food sales, bottled beer, draft beer, wine, liquor, and the offsetting entry, if you will, the other side, is going to be how the money came in so it balances. So anytime you purchase something, anytime you pay a bill, these are journal entries. Some of them are done automatically through your software, and some are manual journal entries. That's all it is recording a specific transaction, if you will. Number 9, fixed expenses. These are bills that stay the same every single month. So if you have an SBA loan of $10,000 a month, that is a fixed expense. Number 10, variable expenses. These are the opposite of fixed. They go up and down with sales, much like, say, your kitchen labor costs running 10%. As sales go up, you're going to spend more money, but it's still going to be relative, 10% of sales. As sales go down, you're going to spend less, but it'll be relative 10% of sales. And there are many other categories, if you will, other line items that are variable expenses. So they go up and down with sales. While there's a whole laundry list of terms you will ultimately need to know, these are a great starting point. And while I teach my members the importance of outsourcing their accounting, I think that is really something you shouldn't be doing. You should be working on budgets, marketing, leading the team, developing your team, leading the business forward. And accounting is one of those things that can take up just hours and hours of time. I want you to outsource it. While I say I want you to outsource it, I also want to make sure that you understand, as a member or non-member for that matter, basically understand the ins and outs of accounting so that you can get the most out of your accountant-client relationship. If you're tired of not being able to leave your restaurant because no one else knows how to run it, I want to make sure you know it doesn't have to be that way. You can leave your restaurant. It is possible to build a team of people who know how you want the restaurant to run with trained and responsible people in place. You can give yourself time away. What would you do if you had time away from your restaurant? Would you sleep better? Would your relationships improve? Would you feel more relaxed? These are all things you deserve to experience as a business owner. It's why we own our own businesses. If you would like to learn how to own a restaurant that doesn't depend on you to be successful, click the link in the description to watch a free video to learn exactly what you have to do. Also, be sure to subscribe to get my weekly tips and watch these 2 videos to get more information and guidance for running a successful restaurant.